Hey there, Jonathan here for Rich Retirement TV, and today I want to talk to you about the kings of the stock market. Over the last couple of weeks, I've been talking to you about what's going on in the stock market, why I think that a massive rally is still in store for the stock market on top of what it's done since March of this year. But specifically, I want to talk to you about the stocks that are really driving higher, the stocks that are pushing new all-time highs. These are the names that you really want to have in your portfolio on your way to a rich retirement, hands down. The stocks that are doing the best aren't just tech stocks. I mean, you've seen headlines: Apple hits new all-time highs, Microsoft hitting new all-time highs, Google, the likes of those companies, but they aren't the only ones that are doing big things right now. And today I want to highlight three stocks that are pushing new all-time highs, have made new highs this week, and are specifically geared towards doing well in the COVID economy, right? No matter what happens with coronavirus, these stocks are going to do very, very well. So let's go ahead and dig right in here. All right, so the first stock on our list today is Camping World Holdings, ticker CWH. And they are a company that specializes in outdoor recreational vehicles, right? RVs, wave runners, all kinds of stuff that you would need driving somewhere. It's like to a lake or the beach, and having a good time. What I love about this stock is that while a lot of people have had to cancel their vacations or cancel their cruises or their plane flights to somewhere nice, RVs, you can rent one, you can drive it pretty much anywhere you want, you can keep socially distant. You're in your RV, you're with your family or whatnot, you go to this place, you go to that place, you can do a lot of stuff just in your RV. You bring what you need and leave when you want. It's great. And this stock, as you can see, has done fabulously. The stock did, just take a look here, the last, just 2020. It wasn't immune, like many of the stocks that we've talked about here at Rich Retirement TV in these videos. It wasn't immune to the Corona crash, but has rallied very, very sharply off the low here. And as you can see, after reporting a strong earnings statement here in early May, the stock has just been vertical, pushing to an all-time high this week. Down a little bit on here on Tuesday, but still very, very strong momentum here. But that's what the chart is telling you. The stock's well above its 50-day moving average, well above its 200-day moving average. And if you actually back it up just a little bit here, it's broken out above previous resistance here right around, 26 and change, just below 27. Big move here, and the start, again, it's the start of a rally, but this stock has more room to run. What tells me that is, we've talked about the chart here, but taking a look, the CEO, or the CEO of the company, Marcus Lemonis, has purchased with his own money $850,000 of stock in just the last 30 days, from May 21st until today. $850,000 of his own money into this stock at the top of the range. I'm going to grab my my marker here. He's been buying his own stock right here, which is basically at the top of the range. That tells you, while the market is valuing this stock very, very in very high regard, he's saying with his actions, not his words, that this stock is undervalued. There's many, many reasons why an insider, like the CEO or other executive officer of the company, many reasons why they would sell their stock, but there's only one that they would buy, because they think the stock is going up, and that's exactly what the CEO is telling you. with his actions. So this is a solid name. They pay a dividend too. So not only just owning the shares, you can hold it through the summer, see how earnings play out, or you can continue to hold the stock and enjoy not just the capital gains in the stock, but also taking some income. It's not a huge dividend, but it's something. You know, retirees are always looking for income, so this is a great name for folks that are income seeking but would like a rocket in their retirement account. So that's stock number one. Let's go ahead into our second COVID king here. Activision Blizzard. This is a name, if you're unfamiliar, they are a gaming company, electronic games. They make video games. If you got grandkids and they're boys, they are probably playing a number of games that this company produces. Really big name in the space. But what I like about them, again, what makes them COVID, resistant, so to speak, is that you can be, while a lot of kids are at home, at this point, a lot of kids are out of school. While kids are having to be socially distant, they can still play video games, and there's a lot. They can still play video games. They can do it from wherever. So let's say you're on vacation, you bring your games with you. Let's say you're stuck at home for X period of time. You've got the game. So this is a stock that's proved very resilient to COVID-19 so far. I expect it will continue to do well. Another name that pays a dividend here, and the subject of more insider buying at the top of the range here, close to the top of the range. So again, the stock puts in here. Just take a look at the chart. The stock puts in a high here, just around the beginning of May, on a strong earnings statement. Comes back down, just love taps the 50-day moving average, and it's broken out here through the month of June here. Just soared to a new high here. This is number one. It's a tech name, so it's in the strongest sector of the market. But it's a COVID resistant name. It's got really strong momentum in the market here, and it's got a lot of great things going for it. So another strong name here, and this one being in tech. But the third name on our list is an interesting one here. This is Wingstop. You can guess what they do: making and selling chicken wings. But what sets this company apart is their technological prowess, their ability to out-tech their competitors. A lot of restaurants had to shut down during COVID-19 and have really struggled as economies in states across the country have opened up. Wingstop has not had that. They spent a lot of time and energy over the last couple of years investing in their technological platform, making it easier for customers to purchase their wings and have them delivered to their house or whatnot. Make it easier than ever before to do, and those investments have paid off handsomely. You just take a look. The stock has pushed to a new high here. Flagged a little bit of a flag going on here in May, but just blasting through. Well supported here by the 50-day moving average. It's well above its 200-day moving average. And on the latest, this week alone, we've seen, in the last, say, 3 or 4 trading days, we've seen the buys here on massive volume. So that's telling you we got a whole new wave of buyers coming into the stock, which is telling here, again, at the top of the range, we're seeing these huge buys. Tells you new wave of money. There's more rally for this name ahead. But again, what I want to show you here is it's not just the stock is doing well itself. The stock has more than doubled off of its low here in March. But take a look at this chart here. Let me make myself tiny, and move me out of the way. This is Wing, the blue line here, compared to the S&P 500, McDonald's, Yum Brands, which are it's the parent company of KFC and Taco Bell, and Chipotle, the mighty Chipotle. Wing here, since the start of the year, has smoked the S&P, which is down some 3% or so on the year. Smoked McDonald's. McDonald's is down 5%. Yum Brands down 13%. Even Chipotle. Chipotle is one of the probably the hottest names in the restaurant space, up only 24% here, compared to the 55% gain in Wing. Massive outperformance of the stock. But again, we take a look at what they're doing. What sets these guys apart from the competitors? Ease of purchase, plain and simple. The companies that are making it easier for their customers to get their products, or easy for customers to use their goods or services, whether it's at home or being able to be socially distant. These are the names that are doing very, very well. And you could get cute and you could pick, random names here or there, bargain buys. But really, as in retirement, you want stable stocks. And the best, most stable stocks in the market, oftentimes the ones that are pushing 52-week highs. That tells you that there's momentum behind these names, especially when they're outperforming their peers. These are the names that I would want in my portfolio, and in retirement, these are names you need in your portfolio. The strong, well-positioned names to crush their competition. These stocks are the ones going to do well. All three of these stocks, again, they pay a dividend. So if you're an income-seeking investor, these are the names for you. But yeah, stick with the COVID kings, and you will rocket your retirement account in just the way you like it. But yeah, thank you so much for. Thanks so much for tuning in to today's video for Rich Retirement TV. And as always, if you want to see a particular stock highlighted, or you've got questions, retirement account questions, or stocks, charts that you want to see, shoot me an email here, or leave a comment here on the YouTube space, and we'll get it in the queue here. Well, thanks so much for watching. And for Rich Retirement TV, I'm Jonathan Rodriguez, and I'll see you next week.